All right, my credit card debt breakdown, full transparency. Let's see what's up.
I have a total of 5 credit cards that I need to pay off. And starting from smallest to biggest, the first one is my Freedom credit card. I owe 1,500 exactly. The next one I owe on is Capital One. I owe $4,448.53. Next card is Best Buy. I owe $5,650 exactly. My fourth credit card is with Chase and I owe $6,731.19. And last but not least, my Discover credit card. This is the one that I owe the most on, and the total balance right now is $11,159.08. That brings me to a total of $29,488.75. I started off at $31,000. I am now at $29,000. I know realistically with my 9 to 5 job, I cannot pay the $30,000 worth of credit card debt this year. But if I find other ways to make money, then it is possible. And I believe that I can do that. A lot of people wonder how somebody gets in this much debt, and it does not happen overnight. It is years of bad spending habits, only paying minimum, and
Hear that? Bad spending habits and only paying minimums. All right, well, at least she went from 31 to 29. Anyways, all right, let's go ahead and get started. See how we could pay off her debt. I would really wish I knew her income numbers, but I don't. And that's kind of the problem with these TikToks because debt is probably always going to be relative to income, right? Debt to income ratio. And what's the number one rule when it comes to lending? Banks don't lend money to people who need it. So once upon a time, she didn't need money, and then now she needs it, and that's why nobody will probably lend to her. Okay, so let's go ahead and get started. Pay off our debt. I really wish I had her numbers, but I don't. And how we're going to pay off? We're going to pay it off with something using something called velocity banking. So let's go ahead and get started. So how do we do velocity banking? All we do is just create a budget. Your budget is your debt attack plan. Okay, so we have your income here, expenses here, checking and savings left over, expense breakdown. We list every single debt that we have, right? And then on our last line item, we just combine all of our general expenses that we always have to pay for every month, so non-debt related expenses. And then what we do here with the velocity banking, we assume the same income, same expenses, right? And with our checking and savings, it just goes to zero, right? So checking and savings goes to zero. And what we're going to do is we are going to increase this thing called cash flow. So what is velocity banking? It's basically not saving money rebranded. It really is, right? And the emphasis here is you're going to put all your money into a line of credit. And one of the things that we will want to do is to not segregate our income. Because what is the bank's ultimate goal when they lend to you? That you just essentially make minimum payments on everything. And so when your money is here, and you have all this debt here, it's getting split all your money is getting split all over the place, and therefore you're making essentially minimum payments on everything. And what we're going to do is put all of our money into one place so we can increase this thing at called cash flow as soon as possible, and we have time to breathe, right? Now, what we're going to do is we're going to assume we have something called access to something called a line of credit. So it's a line of credit. It's basically a financial tool where you can borrow money, pay it back, and then use it over and over again. Now, nobody in the right mind will give you a free and clear line of credit when you only have $5.49 left over, right? And why is that? It's because banks don't lend money to people who need it. You see, when a bank sees a person who needs money, they tend to think that's a bad person who's not going to pay me back, right? That's essentially how a bank works. That's a person who's not going to pay me back. And this is why banking is the most profitable institution out there. I mean, if you ever take a look of, let's say, Chase Bank net income, right? They made 57 billion. They with a huge margin, right? So 280 billion in revenue, 57 billion in essentially profit. And that's because institutional banks know that people who need money don't pay you back. So that's why I don't lend money to people who need it. But the reason why we have a free and clear line of credit, man, if you know this strategy, you wouldn't even be here, right? That's what I think. And plus, it makes the demonstration easier. All right, so what we're going to do is calculate something called cash flow index. And by the way, if you want to see a realistic scenario, YouTube membership only 99 cents, 22 debts, $4 left over, real life scenario, and there was a maxed out line of credit, not a free and clear line of credit. Amazing, right? I call it the PhD of velocity banking. Anyways, all right, so let's go ahead get started. So if you don't know what the cash flow index formula is, basically all it is just the the balance divided by the payment, right? So let's say you have $8,000 in a payment, and then you divide it by, or in a balance, and you divide it by the payment, and then it gives you this number, right? So you get this arbitrary number. And what is the point of this number? Basically, it's telling you a ranking system of how to pay off your debt, right? So the lower the number, that's the one you want to pay off first because you get more bang for your buck. So for example, there's a lot of people out there who think, oh man, I should pay off my mortgage first, right? Why should I pay off my mortgage first? Because my mortgage, that's $220,000, is tied to my home, which is very sentimental and emotional. A lot of people get emotional about it. Like if you tell people like, hey, you won't have to pay a mortgage payment anymore, they'd be like ecstatic, right? But the reason why we need to pay off last, just from a mathematical perspective, is that if I pay the mortgage company 220,000, I only get $927 back in my cash flow. Whereas I could pay 30,000 to the credit card company and I get 1050 back in my cash flow. So this will give you more bang for your buck, right? And then we just use a cash flow index for that. So now what we're gonna do is we take these low numbers, right? And how much is this? This is 8, 15, 27, 30. And then I'm gonna go ahead and sum it up. And then this is gonna be 80,000. So essentially, we're just going to do a credit card balance transfer, right? 80,000. Okay. And what happens when we just transfer that debt to, let's say, a home equity line of credit? Well, these all go to zero, right? Zero, 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 zero. And then look at that. Didn't make more money. And somehow this magically went from $5.49 to $2,657.99 in cash flow. And then our final step is we put our entire paycheck and our entire 6,000 into the line of credit, take the 3,000 out, and then rinse and repeat over and over again. So let's go ahead and do that. G2 plus H2 minus, what is the 2657.99 cash flow? And then what we're going to do is take the average daily balance, multiply by the interest rate, divide by 12, and then the monthly payment is usually the same as the interest. So if you're gonna dump $6,000 into the line of credit, your monthly payment will always be satisfied, pretty much, right? Unless you, for some reason, you don't happen to pay it, the 6,000. But we're assuming constant income, and also that you never get a raise, right? But that's kind of unrealistic. You know, if you stay at the same job, you're likely to get 3% raise, right? And the best way to probably get a raise is just threaten to quit or find a new job. That's kind of like the sad reality of how jobs work, right? All right, so now 34 months, we've got it all paid off, so we're good. And then I'm just going to go ahead and do this. And milestones, 34 months, 80K. Bam, that was easy, right? How much does she have to pay? About 30K. So I wonder how much, what job she has and how much she makes. But here we go. So we got 3 more loans: auto, student, mortgage. Got this loan calculator right here. You just got to type 34. And then now we have the current balances of all of our loans, right? Auto, student, mortgage. Auto, student, mortgage. Look at the cash flow index. We take this lowest one. So let's move this 9 grand of our auto loan into the line of credit. And so now what we're going to do is plus 9035.6. And then this is now 0, right? And so now our cash flow is about $3,000. Okay. So now let's go ahead and do this. And let's go ahead and do this. So 3017.37. And this is going to be 37, right? So 37 months. And so that's 100K. And then it's going to be student loan and mortgage. And let's just do this. So 37 months. So 37, 37. So this is the current balance is a student loan. So I know a lot of people freak out about student loans, and I don't even know what's like cheap these days because sometimes like you see like a $500,000 student loan for med school, but then you're in a balling specialty like anesthesiology or what's another one that's pretty balling? Orthopedic surgeon. Yeah. Man, so yeah, when I was younger, I was like, man, I'd hate to be a doctor. And now that I'm like a little bit older, it's like, dang, that's pretty sweet. Like you just get paid 500,000 just for, well, I don't want to say just for being a doctor, but love to do. Now that I'm a little bit older, I'm like, dang, I'd love to be a doctor now, but I'm not. Anyways, all right, so let's go ahead. So here, what we're gonna do is something called chunking, and chunking is more important when it comes to uh, loans that are long term and lower interest rate. So technically, I could just move this into a line of credit, should be fine. But if we want to kind of save money, right? Save money, then we could do chunk. Actually, you know what? I'm going to be lazy. I'm just going to move this whole thing into a line of credit. So let's go ahead and do this and do this plus 37633.35. All right, so 35. So we move the student loan into a line of credit, but I wouldn't do this in real life, but let's just go ahead and do it for the sake of the presentation because I'm lazy, because it's not going to make that big of a difference. Let's go ahead and do this. So now, what's our cash flow? It's 3017.37. Then I'm going to go ahead and copy and paste. And then you see here that in 50 months, right, in 50 months, it's just paid off. Okay, so pretty much just paid off in about 50 months. 50 months, and then it'd be 150K. All right, so now that is done. So now what we got to do is we got to get rid of that mortgage. So this is going to be 0 and then 3%. So 50. And yeah, pretty much it. So let's go ahead and just plug and play into the quote velocity banking calculator. And I think this is still correct. What's our income now? Our income is $6,000. 6000, and our expenses is 1500, and this is the loan amount. Oh, it gets paid off in 4 years. Right. So now this is 0. Okay, and then this is now 50 divided by 12 plus 4. And now everything was paid off in 8.17 years. Debt free. All right. Well, that's it for today, folks. I probably need to make I think that one of the reasons why I just kind of stopped making these videos is because I have more than 1,000, and I didn't know that you would miss me making these videos because I'm doing the same thing over and over again. And I guess you're not sick of it. Am I sick of it? I don't know. But I guess it's a little bit tiring. Well, I don't want to say tiring, but it's just more like, huh, how do I get that rapid momentum? Do I have to like spend a lot of money on ads? Yeah, I got to think about it. Is there any marketing experts here? Because obviously I'm not that good at marketing. Because I've posted over 1,000 videos, and yet this channel hasn't gained the traction that I thought I would. Now, no shade there. It's just sometimes you kind of see on the internet, and then you compare yourself, like, oh my goodness, like that person has like hundreds of thousands of subscribers, and I don't have 5,000 yet, but it's okay. All right, well, that's it for today, folks. Crayland to Mentorship. Have a great day, and I'll see you on the next video.